You know what's wrong with most imbalance indicators? They look at candles and draw zones, but don't show you where volume really left an open hole in the market. So traders chase levels, watch price slow down, and then get caught on the wrong side just because they never actually saw where the market skipped trading entirely. This indicator changes that, because instead of guessing imbalances, it shows you where no trading happened at all. The true gaps where price shot through so fast that no volume filled that space. In this video, I'm going to reveal this powerful tool to you, explain everything you see on the chart, and give you clear long and short setups you can start using today. To add this indicator to your chart, open TradingView and pull up any market you want. I'm using the 30-minute time frame here, but this works on all markets and time frames. Click indicators and search for volume gaps and imbalances. Zierman. Once it's loaded, you'll instantly notice something different around price, not just volume bars, but horizontal slices showing bull versus bear volume and clean gaps where no volume at all occurred. This is not a basic volume profile. This is a picture of how the market actually accepted or rejected price, level by level. Now let's walk through what you're seeing. Right on the chart, horizontal rows appear across price. Each row represents a price level within the selected range. Unlike normal volume histograms, these rows split bullish versus bearish volume, so you can see which side dominated each price row. But the standout feature is this. When price moved so fast that no trades executed at certain prices, this indicator marks those areas as true zero volume gaps, real untraded voids. This matters because when price rushed through those prices once, it means there was no agreement there, no real liquidity. And price often returns to those gaps later or rejects them hard. Now, before we get into the actual strategy, let me share something that changed how I trade. You can learn this setup perfectly, but if you're not at your screen when it triggers, you miss it. And that used to happen to me constantly. That's why I started automating strategies like this, back-tested setups that run whether I'm at my desk or not. These work across forex, futures, gold, and they even work at prop firms. If you want access to the exact strategies hundreds of traders are already using, check the first link in the description. If price ever zooms through an area and never fills volume, the market didn't want to trade there, and that's a clue. Another part of the indicator you'll see is a multi-section delta panel, usually shown in a box or panel near your chart. This panel tells you aggregated buy versus sell pressure for different sectors within the volume profile. It's like seeing not just how much volume traded at a level, but who was in control, buyers or sellers. So while price moves, you can see not just how high or low volume was, but whether aggressive buying or selling dominated at each price slice. This gives you a real feel for market intention. Now look at the chart again. Notice how some levels light up with bullish volume rows and others with bearish volume rows. Bullish rows mean that price traded there with more buying than selling. Bearish rows mean more selling than buying. And where you see a true void, price never traded at all. Those gaps are like empty space the market rushed through. These are not levels you want to treat like normal support or resistance. They are imbalances that price either will revisit or reject sharply. This is how you can anticipate moves instead of reacting late. Before we trade, let's get your settings right. Double-click on the indicator to open the settings panel. The main things you'll see are: look back, how many bars back to build the profile, resolution/number of rows, how detailed the gap map should be, delta panel options, how the buy/sell pressure is summarized. Start by picking a sensible look back 100 to 200 bars if you're day trading, 300 plus if you want more context. For most traders, default resolution works fine. It gives a clear picture without too much clutter. Once you like what you see, click OK. Now let me show you exactly how to trade this. Long setup. First, find a true volume void below price. This is a level price never traded in. When price comes back toward that void, it either fills it or rejects it, and that's your edge. If price approaches the void from below and you start seeing bullish volume building at nearby price rows, that tells you buyers are stepping in. Now, when price gets close to the void but does not jump through it with bearish dominance, place your stop loss just below the nearest bullish volume row, because if price slips through that, the imbalance likely fails. Take profit at the next high volume area above, or let price fill the entire void and beyond. Short setup. Flip the logic. Find a true volume void above price, a place where price never traded. When price comes up toward that void, watch how the volume rows build. If you see bearish volume dominating the nearby rows and price stalls near the void, that's your edge. Stop loss goes above the next bearish volume row. Targets are the next bullish volume rows below, or let price drop into the void and beyond. If you're a serious trader trying to get funded, you need more than a single tool. You need a full toolkit consisting of elite algos that catch the best moves while avoiding losses in sideways markets. Proven strategies across multiple markets, whether forex, gold, or futures, with risk management built in, and fully automated systems so you can trade without being at the screen all day. So if you'd like to stop burning your time and account testing random indicators and and start using elite tools and automation like all these other traders. Click the link below. Now let's talk about market-specific tuning. For Forex, use a moderate look back and keep the resolution such that the voids and imbalances are easy to read. Forex moves cleanly through imbalances, so price often revisits voids before trends resume. In crypto, price is more explosive. You might tighten the look back slightly, so recent imbalances show up faster. Also, watch how the delta panel shifts big swings in buy/sell pressure matter more. For stocks, imbalances work well on higher time frames. Don't try to scalp every void, wait for confirmation, and use the delta panel as a filter. For gold, price respects imbalances strongly, especially on intraday timeframes. Keep your stops tight and be patient for void fills or rejections. If you want to stop guessing where price will react, start with where it didn't trade at all, and this indicator shows you exactly that. Thanks for watching. I'll see you in the next one.